Hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 12th. Great to be with you guys, or November 10th, excuse me. Great to be with you guys this morning. Lots to talk about. So let's just jump right in. As usual, any questions or trade setups, feel free to throw them on the message board. Mark, good morning. Permendra, Eileen, it's great to have you back in the room. So let's jump right in. Quick look at relative performance for the US dollar. Has a split decision so far in the session. You see the euro, Swissy, and yen off the majority of the session. Euro down 0.46%. Com block doing rather well today, while the Aussie has been rather static. Kiwi's up 0.09 and CAD with a little advance of 0.17. We'll take a look at dollar CAD. Let me write that down actually. I haven't been on the radar, but we should probably take a look at that today. All right, so U.S. oil, yeah, we'll take a look at that as well. Mark, oil is actually coming into a very interesting area of support. So with where the dollar CAD's trading might be a nice opportunity. Absolutely, we'll jot that down as well. All right, so where do we begin? Quick look at the U.S. Dollar index. Here's what it looks like. Obviously, we made that big breakout last week. We kind of touched on this yesterday in the webinar in Daily FX. You probably have a little bit more upside to go here, even if the pullback does materialize into 12,062. Invalidation level still remains right down here at 12,123. And that, as long as we stay above that, you want to be mindful of the dollar. Now, this doesn't hold constant for all the dollar crosses. This is just our singular analysis of the Dow Jones FXCM dollar index, which at its inception is an equally weighted Euro, Aussie, Sterling, Yen. So the sterling looks pretty good to the downside. I still like that. So that's indicative of dollar strength. But as far as playing it versus the euro or even versus the Aussie at this point, I'm a little bit hesitant to do that. So next reasonable area of resistance would be that median line that you see there in blue. We still got a ways to go. And momentum, just remember, this is the first break above 60 that we've seen since March. So don't underestimate the fervor of the rally here. We did just get import prices from the United States coming in slightly weaker than expected. Here's what that print looked like just a couple of minutes ago. Not likely to see any major market movement on that, but you do get wholesale inventories a little bit later in the session at 10, which could be a bigger play for the dollar. All right, let's jump into yesterday's highlighted setups. We'll take a look at some of those radar charts. In fact, I really like that Aussie key. Looks very interesting at this point. Dollar yen as well at daily resistance. That's at a huge level. Aussie dollar has been kind of just waiting for a range break, which I think is pending here forthcoming. So let's dive right in. Here, my friends, is what we look like yesterday on the sterling key. So we were holding shorts on both of these positions last night. I noted in the report. One of them triggered at the nice quarterly ATR. That was no problem. The other one got stopped out at break even. So I had my stop at break even on that one. I kind of pulled it in a little too early. It eventually did pan out, but hindsight's always 20/20. Here's what it looks like on the daily chart. So very, very basic structure. We don't want to get too aggressive on the south side, but there's a couple of things to look at. A, momentum is coming into 50. And again, you can see a scenario we come back and tag that trigger support. B, from a near-term prospect, you were at resistance, and a nice resistance start off the week. Here's what sterling key looks like on the intraday. So 231.74, 231.70 had a nice confluence. I highlight these all the time, guys. My favorite setups: 618 retracement off the high, 618 extension off the low. Nice confluence region there with the median line parallel of the same advance, and that gives you a focus at 231.70, 231.74. So we actually caught an amazing entry on this one. And literally there was like a 10, 15 pip stop on it. We were looking for a run back. The limit was at this low. I was looking for a drop into here, but I didn't want to push my luck on this one. And obviously if we had traveled further in time, that median line starts to contend with that low. Long story short, If you would have had your trigger there, it just missed the limit at the lows for the previous session, just triggered, and that took us out of any short exposure. Still looking lower while below 231.70. Okay, the risk is still to the downside below that region. The broader structure is still in the advance. Okay, this is a perfect example of counter trend trading. Or near-term trading against the broader trend. We're still in this upward channel. So a decent pullback might offer some great long opportunities, actually. If we break this, this is the invalidation. I do happen to think that this thing is going to turn over. You might still make that stretch into 235.12. So we want to be nimble on the downside. Okay, and if you take a look at the 30-minute and zoom that out, you can even see a little bit more clarity to that structure. And again, if we get back here, this is the bullish invalidation level. You look for long triggers. If that breaks, you're continuing to favor the short side. But as it stands right now, momentum really failed to break 60 on the way up. You had a really nice support trigger on the way down, and risk remains to the downside. Now, at this point, look for support, again, along that median line. If that breaks, same targets noted on yesterday's reports are still in line. 230.37, 229.33, and then based on where we are in time, I would want to keep an eye on that basic trendline support, or parallel support rather, which coincides a little bit later in the week here with that 236. Let's move this here at this point. If we breach the top side, so if the long side, or the short side rather, near-term short bias gets invalidated, you're basically looking for a rally up towards 232.52, and then depending on where you are in time, that 100% extension comes in at 233.10. Okay, so favoring the short buy, sub 231.70, 231.74. Again, I don't have anything on right now. We'll see if the opening range for U.S. markets gives us anything. And this is going to be your near-term bearish invalidation. Targets 230.37, 229.30. It's a pretty basic setup. I did want to just highlight in the report, for those of you who might be newer to the near-term trading strategy, it's a bigger ATR. Okay, a quarter of the daily ATR is giving you 74 pips. So it might not be your best sort of thing to dabble in if you're a little bit green behind the ears. But for those of you who have been with me in this strategy for a while, this is a nice wide range ATR trade. Pietro says, I think dollar Swiss is breaking to the upside. Happening right now as we speak. Let's take a look. Yeah. So dollar Swiss I have coming into parallel resistance like basically right here. Maybe a little higher, 10080 to the upside. So if you just take a basic trendline support, or actually let me just adjust that perfectly here. You can see that pretty much puts us at resistance right now. The only other thing I'd be looking for is the March high. You've already made it through the March high day close, which came in at 10018. But I would still be mindful of this near-term resistance that you're coming into here. Not a trade I really get involved in, and I wouldn't even on a scalp basis, I wouldn't be too excited about getting long a pair that's at, basically looking at the yearly high on tap. Also a very tight ATR, Pietro. So some interesting things to look at, definitely. Actually, if the dollar gives a little bit more of a meaningful turnaround, might be a nice opportunity to take some short scalps and then look to get back on the long side again, back down here. But nothing that's on my menu right now. Does that help? Quick peek there. Swissy, since the whole January debacle, not really my favorite pair. Was long on that, so I made 36 pips. Hey, he says, yes, it's perfect. All right, Pietro, cheers, mate. And nice trade. Look, if the levels are there, the levels are there. I'm always a big advocate of that conviction. Just because I'm not looking at it or Jamie's not looking at it, if you're in front of your charts and the levels are speaking to you, guys, by all means, we're not going to be able to catch every single setup. So nice job, Pietro. Well done, sir. All right. So going back, any questions on Sterling Key before we move off? All right. At its face value, one other thing I want to point out is we've just made a simple weekly opening range. That's it. Here's your Sunday low. Here's your Tuesday open high for Asia. And you've got a very clean level to play with. Key resistance 230, 174. Key support at the weekly lows, i.e. 290, 229.33. Also, a quick note here, I do see some new names in the room. Feel free at any point during these webinars, guys, to take a quick snapshot of any of the charts you see presented. If you need them for future reference, you'll see a quick camera button right there at the corner of your GoToWebinar screen. If you save that or click on that, it'll save a picture and image of the chart on your desktop. Okay, next on tap, that's Sterling Key. Nice on the menu. Got a nice scalp out of that last night. We'll be looking for re-entry. Sterling Yen, I played it a little bit tighter because the ATR is much tighter, and yeah, it stung me because I got stopped out at break even. It did hit target. So here's where we were when we took the short. The stop was right against the initial stop was right against 86.37. And we got a decent trigger on a 5-minute chart that put us on the short side. It took a while to come into the target, which was at the 86 handle. We never actually made it quite down there. You can see here, it literally turned 4 pips or 3 pips ahead of target. But, heading into closing out the night, I just put it at a stop at break even before I went to bed. So sometimes playing it too prudent can make you lose out on opportunity. But for me, it's too early in the week. Remember, guys, historically, and this is not something I'm saying or something that Jamie's saying, this is if you look historically at price action, volatility increases throughout the course of the week. So typically Monday will be your lowest volatility day. Typically Friday will be your highest volatility day. So when we're talking about that as it pertains to intraday trading for us, that just means that earlier in the week, if the quarter or the ATR is showing 35, just make sure you're looking at the levels. If there's support ahead of that region, or if you need to, pull that in a little bit, that's what you got to do. As we get deeper throughout the week, then you can expect a little bit more, stretch on every push, the full quarter ATR, if not more, where we look to play those extended levels. So just keep that in mind. For sterling yen, here's what it looks like, or here's what it looked like yesterday. Okay. We were holding right between that key level of support, the 186 handle that we highlighted on Sunday as the resistance region here on the radar charts. We broke through, got the first target, almost clipped the second target. We missed it by like 3 pips. And then here's the pullback, checking for more resistance as support. The range in focus right now is that 85, 90, 86 range right here. And not necessarily that 618, but more importantly, that slope line that you're looking at. That's kind of what we're following on these subsequent highs. So for me, it's an expanding range. Look at that median line resistance. Keep your eye on that 85, 185, 92, 186 region of support, and look for a breakout. Ideally, the thing turns over this week, and we get a move beyond these parallels to give us a little bit more of a concrete break to the downside. Until that happens, here's what the daily looks like before we move on. The risk is for still a rallying to 186.95. That's going to be the high day close from September. Okay, it's the 2015 open where we opened the year. Actually, that came just a little bit lower. And you have the median line off the lows. Keep in mind, we also have the Sunday uncovered gap, and that would require a move into 185.25 to fill where the lower median line parallel sits right now. So the levels are like super clear. I'm just waiting on this one. We got, again, like I said, we got stopped out at break even, which is kind of disappointing because eventually it did not only hold resistance, but it probed even deeper. My limit was literally at the 186 handle, so the low was 185.88. That's neither here or there at this point. 35 pips is a quarter of the ATR on this one, so look for a break of this range, favoring the short side. If you look at the momentum, we were really constructive early in the week. Now that we broke above this level on the pullback, you can see that 60 has been offering resistance on every rally here. That's something to pay attention to. A break below 40 certainly solidifies a shift in momentum. Break below that 85 handle, 86 handle, looks for a run into that 50% retracement. The weekly open comes in at 85.54. And of course, you have a really nice pivot in price here. Any questions on sterling yen? Don't really have any triggers on this one that's worth looking at this point. I hate that kind of trigger, but we'll just keep it in view. Mark, great to see you, sir, says, yeah, with sterling yen and euro yen setups, can we also take a look at the euro pound? Yeah, absolutely, Mark. So let's take a look at, I guess we can segue right now and look at sterling or euro yen. Euro yen's in a different story because that thing's coming off of some serious support. Here's the euro yen daily chart. I think this is the only thing I've been looking at, really. I haven't really focused on it. So this region into 131.80 is so radically important. Sorry about that. Is so radically important on so many different outlooks on this. So if you take a look at this on the daily chart, there's a lot going on down there. Okay, this is a 618 retracement of the advance off the lows that you made for the year into that June high. It comes in at 31.80. We saw two tags, two probes of that over the last 3 weeks. Here we are coming up back on it as support. You have the lower median line parallel for the formation that's been holding since the January low. And a little bit deeper down, which is why I kind of really like Jamie's idea there on the swing side of things for this one. A little bit deeper down would complete an exact 100% extension off the highs, and that's 131.23. So you're coming in some serious areas of support. Like I said, a little bit different of a picture for me than the sterling yen is, but nonetheless, although the immediate focus right now is still for this thing to drop a little bit lower, you should be looking for support like right around here, if not 31.20 last ditch effort. You know what I mean? And that's actually, I'm just looking at Jamie's trade right there. That's 31.20 is where he has a stop. So that makes perfect sense. The 100% extension comes at 31.23. So I do like it. I do like it. If we look at this on the 30-minute, looks like a nice big old near-term rounding process here to the downside, doesn't it? Euro's gotten hammered, right? We've seen some serious declines, a little bit of a recovery to the upside with euro dollar at sliding support, sliding parallel support as well. Kind of fits in together, right? Um, emphatic, yes. I love your short-term charts, exclamation, says Mark. I appreciate that, man. It's here for your benefit. So keep those questions coming as long as we're on the right track here with the euro dollar. I think the euro yen might be in a nice opportunity for a little bit of a bump, but it's really, really critical here. Really critical here. Again, to go back to the 30-minute, sorry I'm bouncing around here with the charts, guys, but to go back to the 30-minute real quick, the only thing I'm looking at is a basic retracement off the highs, okay? 100% extension. This is a little bit closer term from that September high. Has been a nice pivot in price here. You can see that. That's 32.65, 32.78. We kind of broke through it earlier in the week, but we rebounded on it as support, broke back below, and here it is resistance. So in my mind, this looked like, when I just kind of glanced at this morning, this looked like an initial opening range break for me, because here's the Sunday open, set a new high, attempt to press the lows, failure to attempt the highs again, and here's the break. It could happen that this is the, this is going to be the weekly opening range opening range low for the week. I don't know. It's too early. Last week you did get a Wednesday break to give us the bias. So we'll see how this looks. Bottom line, you're coming at some serious support. I would like to see a little bit more of a turn in momentum to get on the long side here. But if that breaks, just for the record, if 31.23 breaks, we get below that region. Look where that sliding parallel is. Okay, you're basically looking for a drop into like 29.60. And that, I think, would be a conservative target, to be honest with you. So very interesting on euro yen. Definitely on the radar. Definitely on the radar. So, Mark, I hope that helps. As far as euro pound, haven't looked at that today. Here's what euro pound looks like. Yeah, honestly, I don't know what to do with that, Mark. Um, I love the enthusiasm, Mark. I appreciate your comments, my man. For euro pound, I don't really have a setup here. I don't have anything that would be of interest for me. The major thing that we were looking at with euro pound all throughout the last couple of months, if you guys remember, were just two basic lines. That's it. Basic trend line resistance, parallel off support channel. You saw how many pivots we got off that. And the only thing is we opened the week right here at support. So we're just straddling it. I really have no setup here. Momentum's given me no conviction. If you put a gun to my head, I would favor actually a long side play here. But I don't think there's anything here for me. Mark says ML start at 513 low. Let me take a look at that. 6-9 high. That does look nice. I just don't like taking reference points from, mid-drift highs or lows, I call them. I kind of would like, whoops, did not mean to do that. I kind of would like that to be a little bit more of a fixated key high low type of play. And if this was the slope I was working with, and I kind of got rid of that in favor of the more near-term slope here, which held for a couple weeks. But now that that's out, this is kind of the one I'd been focusing, and it kind of has us on a break to the downside. I see what you're looking at here, but we could simply just simplify this with basic trendline support and resistance. So in fact, um, well, we'll just leave this for here. Long story short, I'm favoring the long side, Mark, but I just don't think the setup is there yet. If you look at this on a near-term chart, I do think there might be something interesting. Euro pound, 30-minute. Here's what I was looking at on this last week. So do you see this basic channel support, or now support, former resistance? We bounced off it, we bounced off it, we bounced off it. So if we're going to make a turn, that sort of break of resistance, check as support, rebound higher. Now, it just so happens that you're coming back into that same low that we made for the month, same low at that 764, 786 retracement. And the only thing that kind of puts me completely on the sideline is that this is complete universal territory. You haven't seen that since back here. And like I said, this is not necessarily where you want to fight the trade, right? So I want to see this thing recover off 30. I do think you get a decent rebound. It's sterling pips, so although the ATR is rather small, at a quarter of ATR showing you just 17%, might be a decent play here if we get some conviction long signals. But that being said, it's on the sidelines for me for now. He says, alrighty, I don't like it either, and trending pairs sometimes okay to take. Anyway, yeah, I hear what you're saying, Mark. Definitely something interesting to keep on the radar, but not quite there yet. All right, so that is yesterday's sterling dollar and sterling yen setups. Any questions on either of those plays, feel free to throw them on the message board now. We'll take a look at some of the radar charts, and then I want to jump into your questions, guys. So if you have any other trade setups you'd like to look at, before we move off, we've gone over sterling yen, we've gone over euro yen. Here's what dollar yen looked like last night. And then what I also want to do is take a look at the Aussie yen looks very interesting to me here as well. Hey, Chris. Yeah, it says, good morning, Mike. I just got in late. Did you look at Sterling Key? Yeah, we did, my man. I'm just going to show you the chart real quick. Again, this will be archived as soon as I'm done here. So basically still looking at that major key resistance at 231.70, 231.74. We got taken out of that short we were talked about yesterday in the report, right ahead of 70 pips at that low. Um, so we're kind of just waiting for re-entry, see if we get a pop back up into 231.70 again. If this breaks, you'd look higher into those targets. But near-term bearish bias is below 231.74. So quick recap for you there. Dollar yen looks like this from last night. I put this on daily FX as well, and I really just wanted to highlight a major resistance confluence near term for the dollar yen. In fact, that chart I put on daily FX didn't really highlight all of the technical factors that are found up there, but just a quick review. Simple trendline support, now resistance, right there. 100% extension off the lows, screams equal waves, two equal legs up, 123.41. Longer dated, 764 retracement from the decline of the yearly high into that August low. That gives you 123.54. If that wasn't enough, just in case, you have a basic trendline support from the yearly low that we made in January. 1, 2, 3 tags. Break, resistance, resistance. All right, so we're right here. Haven't taken any short exposure on it yet. Again, the dollar is a raging bull right here in some unforeseen or unseen territory for months, and might not be ready for a stab at it just yet, but it's certainly a very critical level here for the dollar yen. Here's what it looks like on the near term. I don't really have any levels mapped out. I've kind of just been watching this momentum signature. You've seen some ongoing divergence all along the highs there. So the only actually trigger that would have panned out would have been this break, easy break sub 60 after rebounding off it twice. But it's just too tight for me to play just yet. I'm looking for a weekly opening range break to give us some guidance. Dollar yen has been actually decent with the opening range breaks as of late. And if we get one to breaking to the downside, you might see a nice, decent recovery. Just back towards basic trendline support. You're looking like 22.44, 22.20. So an opportunity maybe to get a little short exposure here on the end. Certainly jives well with a push lower in sterling yen. I do want to take a quick look at Aussie yen in a moment. Sterling yen, dollar yen. So we'll talk about Aussie dollar and Aussie yen. But before I move off, any questions on the dollar yen? Major critical resistance here. If this breaches 24.13, 24.35, we've been watching this region for feels like years at this point. Nice pivot structures. You're looking at the 2007 highs, a 1618 extension from the advance off that December low. Really big region. But risk is for a little bit of a pullback against this resistance region. If you do, you'd look to buy a decent pullback towards 22.44. Major key support, basically the 122 handle. All right, so that is dollar yen. A quick segue into the Aussie yen looks like this. And here's the daily chart first, just to give you a broader picture of what we're doing. And within the confines of this channel, which could be a bull flag, call it whatever you want, is also an embedded channel to the downside as well, which has been super clean. So I just wanted to highlight that. You're looking for major support at 86 still. Nothing's changed. 86.12, 86.30. And here's what it looks like on the near-term chart. Okay, very simple channel off the highs from last week. puts the focus right now as resistance at still 87.07. I know we surged through that last week, but that was the exact turn that we made on that rally yesterday. And over the next, or heading into tomorrow, it will coincide very nicely with that upper median or basic trendline resistance. So an interesting setup. If we go back and check the lows from Sunday, that would be a very clean weekly opening range to play with. And you kind of look for a range break there to dictate action from here. But the risk is still for a break higher, guys. The risk is still for a break higher. Remember, we have the RBA interest rate decision on November 30th, okay? And if we look at Credit Suisse overnight swaps at this point, market participants are factoring in about a 19% chance for an additional 25 basis point cut this this next coming meeting. And that's been moving steadily lower. So interesting here on Aussie yen. Aussie dollar is a little bit of a different animal as well, but a very similar outlook, let's say, in that the downside might be waning here, and you might see some upside potential, but at the end of the day, you know, you'd be looking still for a trigger break against that resistance here in momentum to get any kind of validation for a broader turn. Here's what Aussie looks like on the near term. So channel support. This is the embedded structure. Here's that gray one, much closer, nearer term. Caught the two lows, caught these two highs. Highlights near-term range of 70.32 into 70.64. We highlighted this yesterday on the radar chart right here. And this is the range in focus. We came right into this today. It held as resistance. It was actually a decent short trigger right from there, guys, with a turn ahead of 60. It was very, very clean. A little too early for me here in stateside, but nice drop right into support right now at 70.32, and that's what we're checking. If we clear the weekly opening range low, you're really looking for a drop down into like 69.88, 69.86. I was expecting to see bearish Aussie because of the CPI, of China. Yeah, Pietro, be careful trying to trade your bias. Here's what I want to say to that. That's actually a good point. You want to have a bias on the trade, Pietro, and then the data will be a trigger either in favor of your bias or it'll invalidate the near-term bias, and you look for that pullback to play the other side. My point is this: you don't want to ascertain or decide your bias based on the data print. Aussie's been in a bearish trade nonetheless. It got hammered on NFPs, dollars in fresh territory. So just because a CPI comes out worse than expected or better than expected, you know, it's not going to necessarily change my opinion. It's still a bearish trade. Now, for the Aussie, the breakout from a technical standpoint above this resistance would be where I'd start to look constructive again. Does that make sense? CPI was weak for China. You're absolutely right. What did CPI come out with? It was like 1.3, I think. Here it is. 1.3 versus expectations of a 1.5 print. Year over year, we were looking for a print of negative 5.9. That came in right in line with expectations. So a little bit softer than expected, sure. Would it be worth a couple points to the downside? Sure. And you got that, right? Pietro says yes, below expectations. Absolutely. And you got the pullback. So the bearish bias here was there, right, Pietro? And that data just triggered the trade. And that's always how I treat it. I always go into the trade or go into these event release having a bias on the pair, right? Because we're on the technical side of things. That's what's guiding price. You know, whether the data comes out good or bad is not going to make me money. It's what I'm going to be trading that'll make me money. So I have either a bias on it, and then when the data comes out, you kind of play it accordingly. So long story short, This thing is set up for a really nice opening range break. If you see a pop above 65, 70, 65, I would be looking for a little bit more of a concerted near-term rally, just towards basic channel resistance. If we see a downside break, like I said, 69.86, I'd be looking to sell rallies towards that 69.30 level and the lows that we made in late September there. All right, but the levels are very clear here. One other thing, we're working with this retracement on the assumption that this is going to be a near-term low, which is why I don't have the 236 or 38 in there. Once we break those highs, you start to feel a little bit more comfortable with that being a near-term concerted low. You can tack those on. It just so happens in this pair, if you do, they actually line up perfectly with levels we're already watching. So just something to keep in mind here on this Aussie dollar. Any questions on Aussie? We covered Aussie dollar. We looked at the Aussie yen channel, and that's also something we'll be watching here to the downside. Very nice opening range. Last but not least from yesterday's setup, Aussie Kiwi. This is another one. If you guys remember from a couple of weeks ago, I think it was early last week. This was huge. This was huge. We came right off support. Very, very clean median line formation here. This slope has been serving us so well. Right off the lows, saw that momentum trigger break early in the month. We were looking higher. Now the opening range break for last week really took us through all the targets right into resistance, and we've been doing nothing but kind of melt off that level. The risk is still to the downside while below this median line, but key support is down at 107.20. Okay, so if we get that pullback, and that's kind of what I was talking about yesterday in the radar chart, if we get that pullback down towards that region, I think it'd be a nice long opportunity. Near term, the risk is for a little bit more of a drop here. Keep in mind you're pivoting along that 200-day moving average. That's at 107.64 at this point, so I'd just be watching that as a soft target, but a really nice setup. Here's what it looks like on the Aussie key intraday in the 30-minute. Just super clean. Okay, so as we noted yesterday, excuse me, we actually did get that stretch right into that resistance barrier at 108.20. There it was, even ahead of schedule. That was right at the open of European trade. And here we are melting back towards the weekly open. So the focus range to start the week is still that 107.20, 107.30 barrier, resistance 108.20. And again, if the breakout's going to materialize, you'd want to hold above this region. A breach of the highs, you're looking for 108.88. You're looking for 109.20. Could be another bull flag here in play. Real clean median lines off the low. And remember with Aussie Key, one last thing. You're probably sick and tired of hearing me saying this, but those same slopes, there it is. Covers major key support and our invalidation level for the long side here at 107, 107.20. And if we do break, look for this targets here. This is a longer term 109.20, 109.10 target. And then beyond that, you'd be looking for that convergence of the same median line slope. That takes you as high as basically 110. So aside from Aussie strength, I think you're going to need to see some Kiwi losses to get this up here. But the potential is there. That's your breakout level. All right, so as long as you stay below that median line, the immediate risk is for the pullback. You'd need to get a solid move towards 107 here to get back on the long side. Hey, Graham says, hi, Michael. Good session. As always, appreciate that, Graham. He says, can we look at Aussie Key while you were talking about the Aussie, a 5-minute closing towards a trigger against 107.62? Against 107.62. Yeah, that could be a play. Could be a play near term. Not really a fan of the support. Actually, you did see some bounces here. Yeah, that could be a decent play. I still would rather get a pull back towards 107.30, to be honest with you, Graham. Remember, this whole region, he says, yeah, oh, key supports at 107.20. Exactly. Yeah, if you got a pullback here, it would be a much more conviction play. Why? Again, basic channel support, a basic 38.2 retracement of the advance, so you get some recovery. The highs from the not last week, the previous week was right there. And those median lines that are on the daily chart, everything's like the whole world converges at 107.20, 107.33. So I think this would be a much more conviction long. Um, if you break out, I would much rather buy a pullback against that median line to get back on the long side. Right from here, if you want to play it, I would play it lighter leverage. Excuse me. And if that trigger gives out, if this resistance trigger gives out, might be a play. Might be a play. It'd be a really tight stop. You could probably get something out of it. But at this point, like I said, the immediate risk is still to the downside. So we'd like to see that pullback give us a little bit better of an entry. Now, you're more than welcome, Graham. Anytime. Always willing to check out a trade. I only have so many eyes and so many charts I can look at once. So when you guys point something out, uh, it's exciting for me. All right. So that is Aussie Kiwi. Another one we'll be following very closely. Aussie yen we covered. Euro CAD. I just want to highlight a quick thing on Euro CAD, specifically more so on the near term chart. Euro CAD is coming into an interesting area of support. This is 100% extension from the decline off the highs and confluent support with this parallel. Now, this parallel is not taken from a random reference point. There's something called a modified pitchfork or modified shift, sometimes you call it, and basically angles the slope to basic trendline support, or if it's a rising one, trendline resistance. So in fact, I don't even really necessarily need this. I could just connect these lines myself, and you basically get the same slope. Long story short, you're looking at basic trendline support. You're looking at 100% extension. That comes in at 41.96. You're basically looking at 42. We're trading there right now. Here's what EuroCAD looks like on the daily. 100 off the high. Median line parallel support. A break below here, you're basically looking at the 200-day moving average. Soft target at the high day close from June is 140.50, and the key 618 is basically 140, 139.91. The interesting thing here is that this would be the first break sub 40 that we've seen since April. The first break sub 40 from overbought condition, you got to go back a ways, guys, from here. Very ominous. Very ominous, right? So something to keep on the menu here for the Euro cross as well as Euro CAD. Dollar CAD is at resistance. Someone was talking about this earlier, had a question on dollar CAD. Who was that? Was that you, Mark? Someone asked about it. Here's what dollar CAD looks like, and this is why it looks interesting. You have crude at support. You have dollar CAD potentially or basically looking for near-term resistance. And that would be a little bit more of a CAD strength type story if those turn over. So EuroCAD might be an interesting play if that support breaks. Here's the resistance on dollar CAD. Major, guys, major. So this is the outside, no, it wasn't the outside day. The reversal day close from that day subsequent to the September high for the year. It's also a 764 retracement of that decline. And a near-term prospect ain't the cleanest, but there's a nice median line off the low here. Momentum halted its rally right at resistance. So again, I'm thinking if you get a pullback here back towards the support median line support. That's some loony strength. You get a nice little pop or a rebound here in crude, and certainly, that would push some downside pressure on that euro CAD trade. And if that breaks support, like I said, could be a long way, long way down. So the puzzle pieces are fitting together here again very nicely on some of the euro crosses as well. For crude, here's what the picture looks like for crude. I know that Jamie put a piece on this on yesterday's swing update. We're looking at the same exact level, 43.50, 43.58. I got a little lower even, 43.18 would complete a 618 off the high. But they all coincide with a basic trend line support and a median line off the high, both right there. So any way you look at it, this thing is at support. If you get a little bit of rebound higher in crude prices, again, that would be supportive of the loonie. It would sort of put some of those downside pressure on the CAD crosses. So it looks very interesting here. Eileen says also, do you think markets are now waiting to clear Veterans Day tomorrow and Yellen on Thursday? So Veterans Day, bond markets, as patriotic as they always are, will be closed, but markets will be open here in the United States. So I don't really think it's going to be a major sap on volume, Eileen. Certainly on any market holiday, it's a possibility. I don't think in the environment that we're in right now necessarily that you'll see it, hit liquidity too much. Are these seminars recorded for later viewing, says Raul? Absolutely, my friend. As soon as we're done here, maybe an hour afterwards or a half hour afterwards, you'll see a tweet on the SB Squawk with the link for the archive. Also, at any point, guys, all of the webinars are archived. Just go to live sessions. You can click on here, live sessions and video archives, and you'll see all the previous webinars that we've done here, both the midweek strategy webinars and the daily intraday webinars. Also, if you're just focused on the scalping strategy, you can always just click on intraday charts, and the latest webinar and reports will be right here. All right, hope that helps, Raul. He says, great job, by the way. I appreciate that, my man. It's always good to see you in the room. John Fortune says, hey, Mike, what do you think of the Sterling Oz? It's interesting you ask because Avery was asking the same exact question. What do you think of Sterling Oz short from here, given the right trigger, perhaps to the 212.50 mark? Thanks. If you haven't done this one already, yeah, let's take a look. We were talking about Sterling Oz on the radar charts, if I'm not mistaken, a couple of days ago. Yeah, right here. So here's what I'm looking at, or here's what I was looking at yesterday. And let me bring up the live chart for Sterling Oz. Just a quick note on the daily. Okay, I just want to highlight that resistance specifically right on 215.26. But let me show you the intraday chart. So that setup from, what day was this? The 8th, Sunday night. Here's where we were. We were holding within the confines of this median line formation. That broke out, and it's just now hitting that resistance target at 214.90. In fact, it looks like we're breaking through it. A little bit ahead of schedule. So near term, I do think this thing has some more upside to go. I'd be looking for like a rally into that upper or a former lower median line parallel, now resistance. Yeah, interesting pair here. Here's the thing, John. If we break and hold above here and Avery, this is kind of an invalidation for the short side. Bearish invalidation 214.90, what we just broke. So topside targets 212 and oh no, that's on the downside. Topside targets from here would be that median line 215.87. Here's the daily chart looks like. Here's the thing, John. I do like this lower, um, both on account of a near-term pull higher maybe in Aussie, and then the cyclical and seasonal trends that you tend to see in sterling to be short. Um, so I'd be looking for a short trigger still. I feel like I'm kind of fighting the trend, but I'd be looking for short triggers. Remember, as far as the momentum signature, this was the first break sub 40 that we've seen in like 6 months. This is the first turn ahead of, or break sub 40 we've seen. This is the first turn ahead of 60 that we've seen. Kind of want the momentum signature to turn over a little bit, but I do broadly looking for a rally to sell. Does that make sense, John? Who says, thanks, Mike, much appreciated. Yeah, I wish I had more, he says, complete sense. I appreciate that, John. I wish I had more conviction for you on this one, but the play that we highlighted on Sunday was basically for this to hold. Look for a rally here to sell. If we're going to break through this, I kind of need to stick to my guns and not really be looking lower from here per se. In fact, if you look at the momentum signature, he touched 40 and rebounded back through 60. That's constructive. Mark says so many pairs are at important support and resistance levels. Wonder what the catalyst will be. You're absolutely right, man. So many trades are. Guys, this is, again, I don't want to be the guy trying to fight everyone, trying to say, buy euro, but dude, this thing is at support. I mean, I look at my charts and I just see support. I can't get on board really aggressively with selling euro dollar here, but it's in a downtrend, and the downtrend's at support. Do I want to get long? No. I'd still be looking for a rally to sell. Do I have anything right now in any type of near-term conviction high to sell against? No. So these things are at, some pivotal levels here. Sterling dollar, I know we didn't touch on that actually. That's pretty interesting. Here's what that looks like. We're coming right back up to check the October open as resistance. Again, I still like the short side of sterling. Even if you do get a rally near term, you'd look to fade that rally to the downside. Here's the near-term targets look like. Weekly open's been pretty tight, so we'll look for some guidance there. Kiwi dollar has kind of been a drifter. This has been off my menu. If I had to play the Kiwi through anything, I'd like to play it through Aussie Kiwi. Here's Euro Kiwi. Oh, did I miss a question on someone for Euro? Or let me stop right here. Real quick, Chris has a question. Says, Mike, to be clear, you don't see the dollar CAD any higher without it being a significant break. I ask because I have a 134.55 as a major level. I probably misheard you. 134.55? What do you have up there at 134.55? I have the high day close at 34.19 and 34.60 is the 618. Oh, Chris, you're just looking at the basic high. Gotcha. Near term, I'm looking at 33.10 as resistance. I don't know if it's going to break, Chris, but I can tell you that that's resistance right now. If that gives out, I think the highs is a conservative target. I think you'd blow right through, if not check that median line, upper median line parallel, which comes in right there anyway. But right now you're at support, or you're at resistance rather, excuse me. Does that make sense? Chris says, agree. I got it. Okay. All right. Right on. Yeah, I mean, you're in an uptrend, you're at resistance. The only thing I'd look at are this. You'll have a clear trigger and you'll know if it breaks. Momentum and price. Okay, you see this thing on the daily close, snap through that resistance, and you see price start climbing through 33. I think you're good. But as long as this holds the slope resistance, and as long as we hold sub 133, the immediate risk is to the downside. Okay, if you're holding a longer term position, you're looking to play the up, you're on the right side. For a scalper like me who might be looking to play this intraday, it's at resistance, right? Same here, original slope with the ML at the August high. Yeah, so you're looking at this. Pretty similar. Pretty similar. I was working with this because it caught not only the low, but also the high and the pivot. So that was actually the validation here on the breakout of above 132 to play a 100 pip long range. You know what he says, yeah, it worked for a while pretty well. It did. And now if you slope it like this, you have it at the highs as well. So either way, and I always say this, Mark, it's great for me because I get a lot of validation when you guys say, hey, I have it drawn this way and it's highlighting the same region. I don't care if resistance is highlighted via trendline resistance, a 618, long-term moving average, a major high, a low day reversal close, whatever. As long as I'm highlighting that region, that's all that matters to me. The more technical factors rest there, the stronger the conviction trade becomes. So right on, brother. Love it. So that's dollar CAD. So Chris, I hope that's clear on that. I hope we're on the same page there. Mark, I appreciate your comments as always. Chris says, perfect, my man. Cheers, mate. I think I had a question here on. Okay, it was Craig. There you are. I was looking for your question. Sorry that took so long. Sorry, Mike, I'm late. Did you cover Kiwi against Euro and against the dollar yet? I didn't. Here's Kiwi dollar. We kind of just glanced at it. It's been a drifter for me. Haven't really been a fan of it. Like I said, I'd rather play it versus some of the other crosses. Here's a chart that I put on the radar charts last week, and then we highlighted it again, but it's still it's still following these slope lines. It's just that the momentum signature has been completely range bound since the start of the week. So there's 60, there's 40, there's 60, 40, right? You know what I mean? So I don't. This thing is lateral for me. If anything, I'd be looking for an opening range break. At this point, you drop down near-term bearish invalidation to here. This level now coincides with the weekly opening range high, a longer dated 50% retracement, actually that's not the right, former slope support, now resistance, and the same parallel off the highs here. So a break above this, shift the focus to the upside for sure. At that point, I tack on a quick retracement. I should probably move this already to check the upside levels. A break beyond specifically kind of this region right here, lower median line parallel and the key 618 retracement of the entire advance. And I think if that breaks sayonara, I mean, this thing is just going to puke out. Remember, the downside break of a descending channel, the upside break of an ascending channel, these are most of the time the sharpest parts of the move. Craig, does that help on Kiwi? Look for either a break below 64.90 to get some validation or a break above 65.65. Until then, I mean, if you want to play this intraday, the range is there. The range is there. And don't be shy, guys. I mean, if you look at a 5-minute chart, let's do that real quick. We haven't looked at many 5 minutes today. Oops. For something like Kiwi, and we are over on time here, and you see something that's a very well-defined range, go ahead and take the triggers. There are triggers here that'll come out all the time. Here was a nice trigger on a 5-minute chart. This is a 1-minute chart, even better, on the rally here. Really strong divergence. Price giving you a much higher high. The oscillator giving you a lower high. Trigger break. You're at resistance. Short. Right? So even though it's in a range, it's okay to scalp it. It's okay to intraday trade it. It's just that I wouldn't be looking for any targets outside of that range until we break. Euro key is what Craig is asking. Yes, it helps. I just took along on Euro key on a trigger. Let's take a look for you. Before I do, let me see what levels we're looking at there. Okay, you're at the 618 retracement of the advance off last week's low. I do like that. But there's a couple of things here I'd be mindful of, okay? A, on the 30-minute, you just broke 40 for the first time this week, and you're holding it as resistance. So that's something you'd be cautious about. Let's see if the 5-minute tells a different story. I like that trigger break. Trigger break and come back test of support. Sometimes that test of support after breaking it is the best entry, actually. And here you are. Holding 60 resistance is not something you want to see. So here are the cautionary things I tell you. You want to see this thing on the 1 minute, on the 5 minute, start to give you some break above 60. If you clear the highs that you made in the pre-open, U.S. markets are open for a minute now or just coming online, I think you'll be all right. As far as your topside targets are concerned, excuse me, 64.20 would be a 50 off the low. It's basically every 20 pips, 86, 64.08, 64.24, 64. I'd be looking to shave that off. I wouldn't get too aggressive on the long, okay? That's just my personal humble opinion, just because, you know, where the euro is and where the Kiwi is, we just talked about that. If the Kiwi breaks to the downside, that's further Kiwi losses. That'll actually help your trade. But with where euro is trading right now, it might kind of offset it as well. So just be nimble on it. I actually do like the trigger break for the long a lot. I just wouldn't get too aggressive on trying to ride that one for too long of a play, just because you did initially break the lows for the week and you're checking it as resistance. So keep your eye on that region of resistance right there. All right, guys, we will wrap it up here. I finished off just on time or a little bit over, but always a pleasure to be with you. We'll be back tomorrow morning, 8:30 Eastern, to cover up some more of these setups. Best of luck trading today. Keep in mind, again, you're heading into some light trading, but I wouldn't really stress the whole Veterans Day thing of liquidity. It's not one of the major holidays I think we'll see too much of a hit on. There's a lot of central bank speeches that are also coming up. Obviously, Eileen was talking about Yellen. You do get those wholesale inventory numbers also at 10 o'clock, so keep an eye on that. Keep you updated on SB Squawk, guys. Talk to you guys later. Best of luck trading. Cheers.